It's time now for today's strategy session. Watching Nvidia ahead of earnings on Wednesday. Take a look at this chart. It shows the median return on the stock, depending on how long you hold it before the earnings report. Buying the stock just 1 day prior has a median return of 2.3%. Joining us now on this, Nancy Tangler, Laffer Tangler Investments CEO and CIO. Nancy, always great to chat. How are you thinking about Nvidia ahead of its earnings report? Have you changed any of your positioning at all?
Well, Madison, thanks so much for having me, and happy Memorial Day weekend. We added to the stock during the tariff turmoil, and so we picked it off at a pretty nice level, dollar cost averaged our positions in. But I still think you want to own this stock for the very long term. This is a company that's central to the AI revolution, obviously. And what we've learned from the deep fake, as I call it, is that the hyperscalers in the U.S. companies are doubling down on CapEx, and they are still investing at a really rapid clip. And so this is a name that I think you want to own and take advantage of if they do disappoint on margins and the market isn't expecting that, which is what we expect.
What do you need to hear from NVIDIA to clearly signal that the demand profile that they've continued to express to the street in quarters past is still there, and not just still there, but has even more room for growth, even with some of the international implications that investors have had to factor in?
Yeah, so Brad, I mean, I think that Jensen Huang announcing that they're opening up their platform is a head nod to the capacity constraint that we're hearing about from Microsoft and Amazon, and that is we could have grown faster, but for the fact that we couldn't get chips, and there's an infrastructure issue. So I think what I'd like to hear is that the company continues to innovate, and they continue to adapt to the constraints, I'll say, that we're getting out of the administration. So we expect in the second half, you will see the newly redesigned China chip adding to growth. And so I expect to hear a little bit about that. And then because input costs are up, I'd like to hear something about, okay, if margins are in fact down, are they compressing overall, or is this a short-term blip?
In the most anticipated earnings announcement of the season, NVIDIA will report its fiscal first quarter results after the bell on Wednesday. Since the beginning of the year, NVIDIA has faced a number of setbacks, including the Trump administration's ban on shipments of its H20 chips headed for China and worries about anticipated semiconductor tariffs. However, a last-minute reprieve from Washington's planned AI diffusion rule, which was implemented by the Biden administration to restrict GPU sales to specific countries, and significant investment announcements during Trump's trip to the Middle East, have caused NVIDIA's share price to be nearly flat year-to-date and up about 40% over the last 12 months as of Thursday. After showcasing new technologies at the annual Computex Taipei trade show in Taiwan, including a new cloud offering that allows users to access cloud-based versions of NVIDIA's GPUs through third-party providers like CoreWeave and Foxconn, NVIDIA released its study. According to Bloomberg analyst consensus data, NVIDIA is anticipated to announce adjusted earnings per share, EPS, of $0.80 dates on revenue of $43.3 billion for the quarter. The company's adjusted EPS for the same period last year was $0.61 on $26 billion in revenue. Wall Street predicts that NVIDIA's data center sales will reach $39.2 billion, up from $22.5 billion, representing a 74% rise from the previous year. The company's second largest segment, gaming revenue, is expected to increase from $2.6 billion to $2.8 billion. NVIDIA's revenue in China is expected to reach $6.2 billion, according to analysts, which is 150% more than the $2.4 billion it made in the first quarter of last year. The U.S. is estimated to contribute for $21.6 billion of the company's sales. NVIDIA, meanwhile, says it will have to write down $5.5 billion in penalties related to the Trump administration's prohibition on sales of its H20 chip. The company announced the news in an April regulatory filing. The H20 was especially created by NVIDIA to satisfy the Biden administration's limitations on AI processors going to China. However, when DeepSeek demonstrated that it could create potent AI models with less than ideal NVIDIA chips, it sent shockwaves across Wall Street and Washington. Trump responded by tightening regulations on the company's semiconductors and outlawing the sale of H20s in the nation. NVIDIA is currently developing an altered H20 that satisfies the performance standards set by the Trump administration, according to Reuters. According to Bloomberg, Nvidia CEO Jensen Huang came out strongly against U.S. regulations during a press conference at Computex, claiming that they have failed and that China's own AI chipmakers benefit from them. When the Trump administration scrapped the Biden administration's proposed AI diffusion rules, which would have established a tiered system that determined which countries could buy AI chips and which required special licenses or couldn't get them at all, Nvidia was relieved of some export restrictions. In the future, the administration intends to implement a new set of export regulations. This move made it possible for Nvidia to announce that, over the next 5 years, it will provide hundreds of thousands of GPUs to Humane, an artificial intelligence company backed by Saudi Arabia's Royal Wealth Fund. The announcement coincided with Trump's Middle East trip, where he also revealed plans to use Nvidia's Blackwell systems to build a second Project Stargate in the United Arab Emirates. In an interview, Bernstein analyst Stacy Rasgon stated, "We now have another deep-pocketed customer willing and capable of spending large amounts of money on a clearly strategic push as Saudi Arabia attempts to position itself as a regional and global AI hub." This is good news for investors who are concerned about the sustainability of AI capital expenditures. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Week. Nvidia, the heavy hitter next week. Shares a little lower today, but it's made quite a recovery over the past month, really. Let's talk about the expectation. What are you looking to hear from Nvidia when it reports earnings next Wednesday?
Yeah, I mean, this isn't just another chip company reporting Q1. Nvidia's earnings are a litmus test for the entire AI economy. They're guiding to $43 billion in revenue this quarter. That's up 65% year over year. And that's after growing 115% last year. So the real story really, though, isn't the top line number. It's more what they signal about the future. Is this pace sustainable? Are we still in a boom? Are we transitioning to more of a mature AI infrastructure cycle? And what we're seeing firsthand, despite the headlines, despite the $5.5 billion hit from export bans and rising tariff pressures, is that the engines of the fourth industrial revolution are still humming. NVIDIA isn't blinking. The hyperscalers aren't pausing. AI infrastructure is still being built at full speed ahead.
Okay, so Shai, let me ask you this, because I do hear what you're saying, and I think there are a lot of analysts and experts who agree with you that they're making up for the export controls and, you know, the loss of the H20 chip. Although, I got to ask you, so Jensen Huang came out with just some fiery rhetoric. He normally comes across as pretty calm about, you know, the state of AI, right, and their space in it, because look, they're the leader, but they had a significant position in China with the export controls on the H20 chips. He said that it cuts down their positioning there, their footprint there. They had about 95% of the market there. It cuts it down to what, about 50% now with those export controls. How dangerous is that to NVIDIA in terms of their pole position within AI?
I believe it's just more of a black eye than an actual headwind. I mean, let's just talk about what we saw at ComputeX. Jensen, like you mentioned, like he had some fire behind him. He didn't just roll out new products. He laid out the next chapter of what AI is going to become. Rubin Ultra aren't just next-gen chips. They're a signal that NVIDIA is pulling the roadmap forward. It's not about pushing silicon. It's about building the infrastructure that can keep up with the model explosion that's happening across OpenAI, Microsoft, Meta, Google, etc. So, like, think of it this way. We're not building proof of concepts anymore through hardware. We're building AI factories. And NVIDIA is a supplier of both the tools and the blueprint. So, yes, China is going to hurt in the immediate, but this is no longer about selling GPUs. NVIDIA is turning compute into a utility, packaged, monetized, and scaled across all hyperscalers. And that's why Wall Street has such a hard time trying to value them, because this isn't a hardware company anymore. It's an infrastructure provider, and that's a drastically different lens that you need to view NVIDIA as.
Big Tech's investment in NVIDIA's AI chips has contributed to the company's growth. Its largest clients also happen to be its fellow members of the so-called Magnificent Seven group of Big Tech stocks. According to Bloomberg estimates, Microsoft is the biggest contributor to Nvidia's income, followed by Meta, Amazon, and Alphabet, the parent company of Google. The 15th largest customer of Nvidia is Tesla. According to Bloomberg, Microsoft spends over 47% of its capital expenditures directly on Nvidia's chips as of the company's fiscal fourth quarter for 2025, which ends on January 26th of this year. This represents nearly 19% of Nvidia's sales on an annually basis. Bloomberg gathers its information from publicly accessible sources, including news articles, firm financial reports, and presentations. It then normalizes its figures annually for comparison. In the meanwhile, Meta contributes somewhat more than 9% of Nvidia's yearly revenue and 25% of its capital expenditures to the company. And that includes all direct Nvidia spending. Nvidia is indirectly supported by Big Tech as well. Microsoft, for instance, pays large sums of money to rent data center capacity from CoreWeave, a cloud operator that purchases Nvidia chips for those data centers at a cost of billions of dollars. In the most recent fiscal quarter, 72% of CoreWeave's revenue came from Microsoft. Together, Meta, Microsoft, Amazon, and Google are expected to spend more than $330 billion this year, driven primarily by their efforts in artificial intelligence. We think that over half of Nvidia's income comes from a small number of major tech firms. D.A. Gil Luria, an analyst at Davidson, stated that while the revenue share has increased significantly over the past 2 years, it seems to be slowing down. According to Bloomberg data based on Nvidia's 2022 fourth quarter profits, just 3 years ago, Microsoft spent less than 1% of its capital expenditures on Nvidia processors, and on an annualized basis, they contributed less than 1% of Nvidia's sales. This spend may further slow down as these customers increasingly use the chips they developed in-house, Luria continued. While Nvidia processors have a very substantial edge in AI pre-training, the cost performance of the custom chips is considerably more comparable. In addition, rival chipmakers like Broadcom develop Ping custom AI chips for their customers, while Nvidia's GPUs are for more general-purpose AI computing. Google, Amazon, Microsoft, and Meta have all created unique AI chips that are optimized for their respective AI workloads, making them more effective for each business's requirements. Concerns have also been raised that big tech companies may reduce their overall expenditure on AI hardware, as investors wonder how they would be able to profit from the technology and make a profit. On May 28th, Nvidia is scheduled to release its first quarter fiscal year 2026 earnings. Bloomberg's analysts predict that data center expenditure on Nvidia's AI chips will continue to slow down. According to Bloomberg consensus estimates, Nvidia's data center revenue is anticipated to increase by over 74% to $39 billion in the first quarter. In contrast, during the first quarter of Nvidia's fiscal year 2025, data sales increased by an astounding 427%. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
So do you think Wall Street is valuing it wrong? It makes me think of, look, the arguments around Tesla, and especially like how Elon Musk says, look, you can't value this as a car company because it's more than that. Is that the same kind of thesis or approach that, you know, kind of NVIDIA needs to, Wall Street needs to shift how it's looking at it, especially given its underperformance across the Mag 7? It's not the worst performer in the Mag 7, but it's underperformed compared to how it typically does.
Yeah, I mean, a lot of the times Wall Street is very backwards looking, and rather than trying to find the forward signal where things are heading. So again, looking at Compute X, NVIDIA made a very under the radar move that was quite eye-opening. They opened up their NVLink Fusion, which is their high-speed interconnect that links the GPUs and custom chips in a shared memory environment. Why is this such a big deal? Is because the narrative for NVIDIA is like all these hyperscalers are building their own AI chips to reduce dependency on NVIDIA. And then Jensen comes back saying, okay, that's fine. You can design your custom silicon chips, Google with the TPUs, AWS with the Trainium, but you're still going to have to interconnect them through NVIDIA if you want performance at scale. That screams to me utility. That screams to me moat expansion. So the message is clear to everyone from Jensen that if you don't have to go all in on NVIDIA's hardware, you just need the NVIDIA's infrastructure to make it all work. So now Wall Street needs to start adjusting their mentality towards NVIDIA that they're not the train. NVIDIA is building the rails. Everyone else is going to be forced to build on top of it.
All right, the rails from NVIDIA. We'll see what those rails look like next Wednesday when NVIDIA reports its latest.
The biggest tech firms are sticking to their outrageous spending plans for the time being. Microsoft reaffirmed in late April that it would invest $80 billion to develop AI data centers, with the United States receiving more than half of that total. In the meantime, Meta improved its 2025 capital expenditure prediction, predicting that expenditures will now vary from $60 billion to $65 billion to between $64 billion and $72 billion. NVIDIA prospects under a tariff and export control-burdened economic climate have received a boost. On May 20th, Tesla CEO Elon Musk disclosed intentions to build a 1 million GPU factory near Memphis. The executive also affirmed intentions to purchase additional chips from the massive semiconductor company. NVIDIA, which has been under pressure since the U.S. banned it from selling cutting-edge AI processors to clients in China, will greatly benefit from the confirmation. Only 200,000 GPUs have been placed at the massive facility in Memphis by Musk's artificial intelligence company xAI, but there is space for 800,000 more, which NVIDIA and other businesses can provide. Plans to construct a second site with 1 million NVIDIA Blackwell GPUs were also announced by Musk. NVIDIA, whose supply chain has been under pressure in China because to the tariff war, should benefit greatly from the facility, which is anticipated to be finished in the next 6 to 9 months. Morgan Stanley analysts have reaffirmed their overweight rating on NVIDIA stock with a $160 price target in light of the noteworthy order from xAI. The introduction of RTX Pro servers with Blackwell Pro Graphics 6000 cards and NVIDIA networking technology targeted at the corporate AI inference market has impressed the experts. An AI corporate platform is anticipated to be supported by the servers. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Certainly saw the move on the heels of the headlines, right?
Yeah, definitely. So we have a multiple amount of factors that are actually taking place. We have the headline risk, not only just the Apple news, but also the 50% tariffs with the EU. They are meeting today too, so maybe we get a little bit of a readout. Maybe it's a little bit more positive. That could also push the markets up and try to recapture some of these losses. But you also have us going into a holiday weekend as well, Nicole. So traditionally, we actually do see very low volume on days like today, and then also liquidity drying up. And if you have these news headlines with low liquidity, you can have really aggressive price action both to the upside and downside, and that's also going to have an impact when it comes to volatility, which is why we are seeing the VIX at an elevated level right now. What's actually very interesting is that we are testing the 200-day moving average on the S&P 500, so you want to see some buyers really trying to step in. And if we actually look at the daily chart, there's a couple of different things that are actually taking place here at these current levels. Not only do we have the 200-day moving average, which I'm going to have in purple here, but you also have this uptrend line that we've had from the lows that really kind of actually aligns right there with the 200-day moving average, and we're fairly close to the 20-period moving average as well. So a lot of confluence at these current levels, and so you want to see the market actually try to react and recover here before we have a breakdown. Breakdown below that 200-day moving average kind of has us going back and testing this gap to the downside here, and then breaking a, we'll call it a secondary trend for right now. Breaking a secondary trend from the lows here could also signify or provide maybe a little bit more selling pressure in the market. The other thing that I'm a little bit concerned about is the cross of that MACD. It's fairly close. It's not has not crossed yet. We have not seen the 12 EMA cross below the 26 EMA here yet. But if we continue to see some selling pressure in today's session and close lower than, let's say, that 5760-ish area here, you probably will see a MACD cross on the daily, which is actually bearish. It's still above the zero line, but it would be a bearish signal here. You already are seeing RSI actually moving to the downside or kind of diverging here a little bit. We just saw a little bit of a stalling out here. So obviously, once again, news headlines, maybe we were a little bit exhausted. We had some consolidation taking place. We had some selling pressure taking place as well over the last couple of trading sessions here. And the news lines really will not help. But the confluence of all of those moving averages are going to be very key for us to try to defend that.
Yeah, understood. The VIX is jumping today, right? Up over 20%. Your thoughts there?
Yeah, you are seeing an elevated VIX once again for two reasons. You're seeing a lot of volatility, bringing tariffs back into the market conversation, kind of overshadows what we have been talking about over the last couple of days when it comes to yields. And then also, you also have once again just very low liquidity just in general. So you're going to see VIX being a little bit elevated here. And if that continues, and we continue to see that rising here, that'll probably also provide a little bit more intraday volatility just in the market as a whole. What's also very interesting here, we have a chart comparing high yield credit spreads in the VIX. We've seen high yield credit spreads actually moving up here over the last couple of trading sessions, and we haven't seen volatility really kind of respond to that. Now we have that catch-up trade. There's a really strong correlation between the two, and that's what we're seeing as far as follow through here today. What's going to be also very interesting here, high yield credit spreads and treasury yields are going to probably diverge if we do have this uncertainty in the market. We have a risk off tone right now. You're seeing yields actually move lower, but high yield credit spreads will probably move higher, which is also once again fueling the VIX. And just kind of getting into the intraday here, a nice little bounce so far here, Nicole. You get some buyers to really step in here. We've moved up around 10, 15 points since the open so far. And if we're able to try to recover here, you're looking at the 58.50 area as your big area of resistance to the upside. And if we actually have a break below 57.75, I'm looking actually at around that 5,700 level to be potentially tested. We're not there yet. You probably would need to see some additional headlines here, but given the lack of liquidity in the market, I do expect that we're probably going to see a lot of price action and volatility in today's session alone, even just given the comments that we've already had from the White House today.
And then there's tech. Kevin, worst performing sector of the day. You're taking a look at the NDX chart for us, which we were able to say this week, oh, the NASDAQ had turned positive for 2025, but if we keep selling here, we won't say that anymore.
Yeah, and this is being dragged down by Apple. Actually, if you look at the performance from on NVIDIA, we actually did see some buyers stepping in, but this is another technical setup on the daily chart where you just get a little bit concerned about. It's not like the end of the world here, but we are kind of hinging a little bit lower. We do have a little bit of a gap here if we're looking at the NASDAQ 100 futures. We have RSI breaking to the downside, and once again, that MACD cross here. If you're looking at the Fibonacci retracements from the low tick to high tick of what we've seen from this rebound here, a 38.2% retracement to the downside, still sitting at around 19,590 here. That's actually still would be kind of bullish for a back test here. So the NASDAQ has actually moved very aggressively off the lows, over 30% at this point, well, not including today's move. So even if we do have a comeback retest here, it doesn't mean that the bulls are losing steam. I think that actually would be a good technical pullback for some buyers to really try to step in, maybe some profit taking place here over the next couple of trading sessions.